Have you heard of CTOS or CCRIS? Want to know more about it? Then keep on watching.
Hey everyone, my name is Ivy.
I'm Ying.
Welcome back to the Financial Fitness
Channel.
Channel. Our channel is all about money and self-development tips. So if you haven't subscribed to us yet, remember to hit the subscribe button down below and let's get this started.
So before we go into CTOS or CCRIS, first we need to understand what is credit score and how does it work. A credit score is like a test score on your exam, but in this case, it's an adult report card on your financial health. It basically shows a record of your financial history, such as your payment history, the type of loans you have, the length of loans you have, and legal offenses, and etc. The reason why credit scores are so important is because many businesses, such as the banks, would use them as an indicator before approving a loan so that they can avoid default loans, which are loans that people can't pay back. So whenever you try to apply for a loan, the bank will run a credit score to check your financial history so that they can evaluate whether you are a good payer or a bad payer. The banks can use your credit score report to see histories like whether you have been paying your loans on time or whether you have ever missed a payment on monthly expenses such as telephone bills, electric bills. They can also know all the past and current debts you have that has not been settled. And based on all those transactions shown on the report, the bank can evaluate your capacity to repay the loan and then decide whether or not to approve your loan application. Credit scores reports are not just open to the banks. Other businesses such as telecommunication firms, debt collection agencies, insurance companies, and even certain employers can run a credit report check on a person before they approve a transaction or an application. In Malaysia, there are a total of 4 agencies that provide credit scores checks. The main one would be CCRIS, which is the government agency managed by the Credit Bureau of Bank Negara, while the other 3 are private licensed companies, which you may have heard of as CTOS, RAM Credit Info, and Credit Bureau of Malaysia. The difference between CCRIS and the other 3 private agencies are the type of information that they provide. Generally, CCRIS provide information that you have with the banks in Malaysia, like housing loan, or credit card transactions. On the other hand, private agencies like CTOS would provide a wider range of information that does not only include information from CCRIS, but also from other sources like bankruptcy info, legal offenses, and etc.
How are credit score calculated and how can you improve it? Different credit agencies have different formulas to determine an individual's credit score. So you shouldn't assume your credit score would be the same for all agencies. Generally, credit scores are calculated based on a few common factors, such as the number of different loans that you have and how much the total amount, whether you have paid your loan on time, and if you have missed your payments before, the duration of your credit history, how many types of secured and unsecured loans you have. If you do not know what is secured or unsecured loans, we have already explained it in our personal loan video right over here, so you can check it out there later. And finally, whether you have accepted a new loan recently. And if you have checked your credit score and realized that your credit score is not looking very pretty, then here are some tips on how you can improve it. Number 1, update your credit details. Whether it is your contact number, email, or your address, you should keep your personal details updated with your crediting agency because all of this information is important for the lenders to know. So be sure to check whether your information is updated. Number 2, get out of debt and pay your bills on time. If your credit score are bad, usually it's because you haven't been paying your debt. Even if you cannot clear it off immediately, you should at least try to pay it off with smaller installments. The important thing here is you pay it regularly and on time, instead of paying it off when you have the extra money. Number 3, be careful with your financial relationship. If you happen to share a financial obligation with someone, regardless whether it is with your spouse, your friend, or your family member, just know that their paying habits can affect your credit score too. For example, if you bought a house with your boyfriend and he always delay paying the bills, even when he is the one who is at fault, both of your credit score will still be affected. Number 4, build up your credit history. If you have never borrowed a loan or had a credit card before, and your credit report is totally blank with absolutely no credit history, this will also affect your loan approval because having no credit score is as bad as having a bad credit score. This is because lenders would have a difficult time evaluating whether you are a good or a bad payer. That is why it's necessary to develop your credit history. But if you do not want a loan, you can always grow your credit score by obtaining a credit card. Just remember to pay back what you have used and pay it back on time. Not having a good credit score will not only affect your loan approval,
But it will also affect your ability to negotiate for a better interest rate.
so make sure you check your credit report today with CTOS, CCRIS, and also with.
Ramsey or Credit Bureau Malaysia.
And if you like this video, remember to give us a big thumbs up. If you haven't subscribed with us yet, remember to hit the subscribe button down below, and we will see you next time.
Bye.